This is one of my favorite topics for us to talk about in terms of, which one of these companies is winning this particular battle of the new way of consuming content. And I don't think it could be any more timely given that everyone's, at home. And I'm sure that reflects in the amount of people that are using these services. Does your data start to reflect that?
It does. You're right. It's absolutely insane as far as timing goes. This is going to cause people to stream more TV. That's just the nature of it. You're staying home all day. Yeah, you got to do some work. You got to homeschool your kids or whatever it may be. But there's a lot of downtime, and people are filling that by watching TV. So when we look at the number of people talking about just streaming media, we saw a huge influx when Disney Plus launched. That actually brought a lot of new people into the marketplace for streaming. Big spike is actually, I think, the biggest spike that we've ever seen. It's a very successful product launch, but it also had waves across it. It wasn't just people joining for Disney Plus. It was people getting on and getting a Roku device for the first time because that's how they got Disney. And then when they discovered they had Roku, they said, well, what else can I get? So they got Hulu, which Disney owns most of, and they also got Netflix and other services. So that was a huge spike for the industry overall. But even when you look at that spike, if you look at how things are going now, it's actually it's not quite as high on a one-day level, but on a sustained level, it's much higher. I think we're about 2x the normal number of mentions, the baseline, if you want to talk about that, right now versus what it was. So people are flooding into this market, and just not only new subscription, but just existing customers watching way more and more television through streaming.
Landon, we were just having a discussion in the first block with Sean Cruz how this economy was already drifting in the direction towards online shopping and home delivery. You can make the same case on streaming. And now with this new world we find ourselves in, I think everything towards streaming and like this is just going to be more accelerated. I think the numbers from Disney Plus, the numbers from Netflix, all these streaming services, they're not going to just have more viewers, they're going to have more subscribers. I think these numbers are going to go exponentially higher here, and that's going to define what we talk about on this network all the time, winners and losers in this environment. I think you're going to see. But Landon, are you seeing anything like that? Like new people talking about it for the first time and adding these services, not just looking at them?
Yeah, so the last chart that we looked at was people watching the television, watching these streaming shows. And if we look at I think we've got a chart on the new subscriptions. You can see that it's spread out. We're actually tracking Netflix, Hulu, and excuse me, and Disney across these. Netflix is clearly the winner. They've got the biggest uptrend in people signing up for the first time. You can see where that Disney spike came in. A ton of people came in initially on launch. Of course, it fell off, but it's actually ramping up even faster than Hulu. So I think that Frozen 2 has a lot to do with that. People want to watch that movie. They just released that recently. But Netflix has a lot of new shows that are getting people talking, and new people are coming onto the platforms at very high rates, rates that we haven't seen for a very, very long time, maybe ever. So this is huge for this industry. And like you said, it's not just people watching more shows, it's people signing up because all their friends are talking about it, and they got to get the account for themselves. So Netflix is the one that we're seeing doing really well. And when we look at who's canceling across these three services, we actually see that Netflix was on a bad trajectory there for a while. Towards the middle of 2019, the rate of cancellations were increasing. They righted that ship. It's been decreasing ever since, and now it's going back to really low levels. Disney, after the launch, a lot of people started canceling because there wasn't a lot of new content, and you can see that uptrend sort of halted right around the time that all this quarantine stuff started taking over and Frozen 2 came out. So Disney's flatlined. Hulu's been pretty steady. But I think that overall, across all three of these charts, you can see that Netflix is the one that's really dominating. They're doing a fantastic job with new content and just getting people to sign up and continue watching.
Yeah, Landon, you talked Frozen 2. We talked about that a couple weeks ago in terms of how that's helping out Disney. Is this all Tiger King now for Netflix? I mean, that's what I'm seeing all over social media in terms of the kind of the show of the moment. But what I want to focus in on here too is kind of get your idea. What I'm seeing is Netflix growth is growing the fastest, but it also looks to be the biggest base to begin with, and basically all of these cases as well. Is this the bigger player growing at a faster rate in terms of dominance here, even though it does appear that the rising tide is lifting all boats in this case?
Yeah, it is. It's actually Disney, I would say, is the one that's getting the biggest percentage gain, followed by Netflix and then Hulu. But yes, the Netflix is such a big player that it's going to have a bigger increase, or just by raw numbers. But when you look at percentage, it's actually Disney that's getting the largest growth as a percentage level. And yes, unfortunately, I think you're right. It is Tiger King that's pushing a lot of this. I never thought that I'd be watching Joe Exotic. It's an amazing character, but yeah, that's amazing. They've also got Ozark. So Tiger King and Ozark are the top two mentioned on Netflix. Frozen 2, obviously Disney, and then Little Fires Everywhere is the big one that we're talking about as far as people talking about them on Hulu. And when you look at these companies, how they've done, Disney's obviously been hurt very badly in this market because they are not just Disney Plus, right? They've got a lot more revenue streams that are all being shut down right now. The parks are closed. ESPN is basically, it's showing marble races and dodgeball, which is pretty awesome, by the way, but it's no live sports. And then you've got Netflix that is like 4% off of its highs in February. So it is hanging in there where a market's been just absolutely killed. Yes, it's bounced back, but those investors in Netflix are very happy right now. This is a good thing for Netflix, which obviously it's bad thing for the world, but good thing for Netflix right now.
Yeah, and Kevin, I want to pull you back in this conversation here.
Mark,
I think one of the things that we've talked about so much is the fact that Netflix only business is streaming and content. In a time like this, that's the biggest advantage that it has, which is Landon's point. But go ahead and finish that thought as well. And then I want your thoughts on that idea of it, being so focused, actually being a positive right now.
Yeah, I mean, having all your eggs in one basket, which Netflix does, was hurting Netflix early in this process, and now it's flipped 180 degrees, and now it's helping them, and it hurting Disney. Remember, Disney, their Disney Plus service was part of an enormous conglomerate that had live sports and theme parks and movies, and now all those are being hurt, and Netflix just has streaming. And that's why that relationship has flipped in the other direction. But Landon, I was going to mention, next week in our streaming discussion, let's talk about streaming home workouts, because that's what's coming. If you look on your social media, page, they're all over you for home workouts, as all the health clubs are closed and people are now looking for ways to exercise. So I can't scroll through any of my social media without seeing this online workout and this online workout. And you know how they target market these audiences, and they are all over the place. So next week, we're going to talk about home workouts in streaming, Landon.
I love that idea. The only problem with that is there's a lot of free competition out there, because a lot of trainers and wannabes are getting their content out there. And so if you were looking for something paid, it's got to have to be a very high quality platform. There are a couple names that we're looking at. We'll talk about those next week. I think that's a fantastic idea, Kevin.
Yeah, I wonder, Landon, if YouTube would be the clear winner in that space, or Facebook Watch. We'll have to see. But Landon, last thoughts on Netflix and Disney, and thoughts about how you would approach trading them, given all of what you guys are tracking right now.
Well, obviously, if you're holding Netflix, you're very happy right now, down 4% from the highs. That's just amazing in this kind of a market. I'm not sure where the fund money is going to go once these markets do start coming back. Are they going to take their money out of Netflix and start pouring it into other companies? I'm not sure. I do know that this is obviously very good for Netflix. A lot of people are signing up. A lot of people are watching. I think it's just going to come down to, can they keep creating new content, which is a question of how long does this quarantine last. With Disney, it's down a lot. It's down more than the market. It's about 28% off of the highs. But, just from talking to people, this is anecdotal. This is not hard evidence. But when this is all over, there's a lot of things that people have on their 2020 list of things that they want to do. And I bet you going to Disney is one of them. Once those parks reopen, people are going to want to get out there. They want to go to restaurants, bars. They're going to want to go to the movies and things like that. And all that's going to benefit Disney. So, yeah, it's tough at these levels. I think I would be an investor of Disney, but it's going to be in a situation where I'm going in slowly a little bit each week because I don't want to try to pick the bottom, and I just want to bet on a recovery over the long term.